Government going to give them more tax credits. They're fantastic cars. They need to sell a lot more cars. I'm not willing to pay this price. Will the demand for the cars continue? That's the question. Diluting. Tesla, the polarizing stock. Guys, I have two Teslas. I have a Model S and a Model 3. They're fantastic cars. I absolutely love road tripping in them. I love the charging system capabilities that's around the country. 37,000 chargers around the country. I have driven from Ohio to North Carolina, South Carolina. I've driven to Georgia. I've driven to St. Louis. I've driven to Virginia. All of these places in my Tesla. It's a fantastic experience. There was even one time where I didn't want to get a hotel. I just wanted to stay overnight, catch a couple of hours, sat at a supercharger, slept in the car, put it in camp mode. It's a fantastic car. Don't get me wrong. The problem is I'm not willing to pay this price. The question becomes, what price am I willing to pay for Tesla? So let's go through a couple of things here. $645 billion market cap. This was once over $1 trillion. They hit an all-time high on November 4th of 2021 of $414.50. A 52-week low, guys, in January, beginning of this year, of $101.81. That, to me, tells me that all stocks are susceptible, even though you have darlings like this one. When this thing was at $400 and some a share, no one would say that this would ever hit 100. I even had my father telling me, you need to be buying this at 400. You need to be buying this at 350, whatever. And I said, Dad, all stocks are going to get hit and high flyers are going to hit the worst. When you see a company that just goes straight up like this, normally they're going to start to trickle down right here and come back to the value that they actually deserve. Remember, the stock market is a voting machine in the short term, meaning that you and me vote on it every single day, buying and selling stocks. But in the long run, we're going to hit that weighing machine that is going to average out and hit the valuation that it deserves. And it came really close when it got to these levels. So let's get into some stuff about Tesla. There is no doubt that they have crushed deliveries. They've crushed everything the past couple of years. And the reason that I say this, there is one electric vehicle company that is going to work, and it is Tesla on a mass scale. Ford is not going to be able to do it. Porsche is not going to be able to do it in this current state. Lucid, Rivian, none of these companies are going to be able to do it. Why? Because they don't have the charging network. It is so important to have the charging network. And now you see every company, including the White House, is begging them to say, open up your chargers. We need electric vehicles because you guys need to be able to charge these vehicles to drive across the country. Outside of that, they're cars that you get in, go to the ice cream parlor, and you come home, and then you don't do anything else with it. You got to charge it for another 8 hours. Now with Tesla. Now looking at this revenue growth, it's absolutely insane. Coming from $2 billion in 2013 to $81.5 billion in 2022. There's no doubt that they are still in this growth phase. Will the demand for the cars continue? That's the question, especially into a recessionary environment. Net income. The net income growth is there. They're crushing it. I don't know what else to say about that. The cash flow. Let's see what they're doing on cash flow. Consistently driving higher cash flow, doubling year over year, which is absolutely fantastic. Now, the thing that I don't like about them is the shares. During all of this hype that we've had the last few years over Tesla, Elon Musk and Tesla just kept diluting you as a shareholder. Diluting. So your shares, you kept getting a smaller piece of the pie to sit at the same table. And that's exactly what they have been doing. And it seems like their shareholders want to start buying back shares now, which still doesn't make sense at these irrationally high prices, but that's okay. Don't worry about it. Tesla's going to the moon. Now, let's look at the 8 pillars real quick. And before I do this, these are our 8 pillars. If you haven't watched our videos before, what we do is we screen through stocks and we look at certain value metrics that say, hey, this is worth looking further into. This is not worth looking into at all. Or this is worth looking into, saving, and then throwing on a watch list and waiting until that stock price falls. Looking at our 8 pillars, these are 8 different metrics that we as a channel look at. 5-year PE, definitely not there. 190, we like it to be less than 22.5. Return on invested capital, they're getting there. They're getting to that 9%. Return on invested capital is the money that you invest back in yourselves, the return that you get on that money. Now, revenue growth is there for sure. Cash flow growth is there. The debt situation is way better than I expected. They are diluting the heck out of you from a shares perspective. But you'll notice, I also have a couple of pillars up here. What are these? These are my pillars. These are my pillars that I use to screen stocks a little bit further, and you can do that too. You can go in and click on Tools here and go down to Pillar Screener. And Pillar Screener, I'm just going to click it here, is going to give you quadrillions of different metrics that you can throw in there. You can do up to 12 at one time, going in and changing different things. If you want to come and put in some of our 8 pillars and change a couple of numbers, sure, go for it. If you want to come in here and find stocks that only have a dividend over 2%, you can do that. If you want to find dividends over 10%, you can do that. All of these different things you can do in our software. Right now, we're running a special $7 for 7 days, but we're also running a special for the Oracles of EM. It's a little bit deeper of a tier. And this is the tier where there's the investing club. You can learn how to trade. You can learn how to sell options. I'm selling options on Tesla right now, just for those of you that are interested in knowing that. 7 days, $17. Try the tier. If you like it, you get rolled into the month to month, or you can come in and pay for the whole year up front, get 2 months for free. So let's go here and see what the analysts have to say. I also want to go and check out some bull and bear cases. You're looking at the earnings per share side. You got revenue on the brain. $5.70 in 2023, and at the end of 2027, they're going to do about $8. So this is somewhere in the, I don't know, call it 14, 15% range overall. Pretty good. Now on the revenue side, 118 billion, and they're going to go up to 232 billion. This is probably somewhere in that same range. Maybe let's call it 15%. Now, to justify the price that they're at, they need to do a lot more than 15%. They need to sell a lot more cars. So in 2022, they did 1.3 million car sales. That's great. Now they need to do a lot more. They're on pace to do more this year. And I think that the question becomes, I don't think it's the supply issue, to be honest with you. I think it's the demand issue. Is the demand going to be there not only for Tesla, but for Tesla in some type of recessionary environment? That's the question that I'm looking at. So gross margins in the auto industry have been decreasing. That's not a good thing for Tesla. That's not a good thing for any car company, but they're a car company to much of some people's dismay. But those are things that we're going to need to look at. Also, we need to look at the tax credits, because outside of certain tax credits, are they going to make money? Also, is the government going to give them more tax credits? Because right now, I told you earlier in this video, they are going to start using Tesla charging stations throughout the country, those superchargers, to charge other cars. They're going to have converters and whatever. So that brings up 2 questions. Are they going to get money from the government to do that? And how much? And number 2, if there are Fords and Chevys and Porsches and Audis and whatnot over at different charging stations, do Tesla owners get pissed and say, yeah, I'm not buying a Tesla anymore, there's not enough charging stations out there? Because when the Model 3 came out, the market was flushed. It was a cheaper car. You didn't have to pay $80,000 to $100,000 for a Model S, and tons of people were able to get them. Then the Model Y came, and charging stations around the country, especially on the west side of the country, they were saying, hey, we can't charge. There's too many people out here with electric vehicles. It's too backed up. And some of you are probably in that situation. I've never run into a situation where there's not a charging station stall open for me, but I know that it's the case. So if they open it up to other EVs, is that going to be a problem? I don't know. Now, from the bull side, they've increased orders and everything 40%. They've increased revenues 40%. They've increased they are absolutely crushing it. Is it sustainable? That's something that you have to ask yourself. And it all comes back to the type of environment that we're in. So let's see, if we put some stuff in Stock Analyzer tool, what we would pay for this today. Let's go with, on the revenue side. See, I can't look at this and say, yeah, we're going to sustain revenue growth of 51%. And over 10 years, we're going to do 51%. And over 5 years, we're going to do 40%. I mean, come on, let's be realistic here. But you know what? I'm going to do something. I'm going to go 10, 15, and 20. I think 10 is reasonable, maybe a little bit lower. 15 is what analysts say on average. 20, let's say they crush it. Profit margin. Let's go with 5, 8, and 11. Free cash flow margin. I'm going to do the exact same thing, okay? Let's say that those weigh out to each other. Now I'm going to go with 16. You know what? I'm going to go with 18, 20, and 22 because they're still in that growth phase. Let's give it to them. 12 and 14%. You know what? I'm going to go with 10, 13, and 16% because I got to get some bang for my buck here if I'm going to go with this investment. Current price, $207. You can see it's on my watch list at $100, $32 on the low end, $110 on the high end, $65 in the middle. I think this is probably worth somewhere around $50 to $65. I'm selling puts in this area. There it is. Argue with me in the comments. Have a great day.